Hello again, everyone. In this technical analysis of the stock market video, I call it Inside a Bubble because that's where I think we find ourselves with this market. And I talk about that over at on my website in the latest blog post I just put out yesterday, A View from Inside a Stock Market Bubble. Check it out, joehenches.net, and while you're there, check out the membership. All right, let's start off. Today we're going to look at the Dow Industrials and one of the indicators that I look at every day. And we're also going to compare the Dow to the Dow Transports and see how they're doing. And then we're going to check in on oil, gold, and silver. So stay tuned. All right, so let's start off here with the Dow. The Dow was up 227 points on Friday, but for the week it was down 157 points. Let me get rid of the crosshairs here for a minute. So you can see a little bit of an inside down type candle for the week. So a little bit of a pause going on. You can see the chop that's happening back in here. Now, I do think that there's a decent chance that this high that occurred back over here on, I think it was the 15th, is the high in the end of the 5-wave move. And that's what I've got as my preferred count. We'll see if it holds. Let me go back and zoom out. I have changed my overall picture, and in case some of you are really following me for a longer period of time, I did entertain the idea of possibly an A, B, and a C as a very large flat, but I've moved away from that because of the extent of the move that we've had up here in the high, and it's really stretching the parameters, I believe. And from, in terms of the next move down, whether it's the first move of a major bear market or whether it's a C move and a flat, it's still going to be, pretty nasty type move. So I don't think it really matters a whole lot in the short term. But right now, I've got this as a high, and let me show you the alternate picture. Let me show you how this is playing out right now, and then there is an alternate picture. Okay, so here is the way I've got this labeled. Let me kind of stretch this out a little bit. And actually should zoom in. There we go. So I'm working this the fifth minute wave here within the fifth minor wave is the way we've got this. And right now with the high here on the April 16th, with that first hour of the day on April 16th, and I am in a 65-minute view in here, so that's why I said that. So I think from a wave count, it looks to me like we are still playing out in terms of a 1-2, working our way to the downside. Pretty big move, snapback move that we had in here on Friday. But then all of a sudden we got this reversal candle in the last hour of the day. So it's going to be real interesting if that comes down. You notice this did not take out this high, so it's still valid that we're working our way down in possibly in a third minute wave. But it's also possible that what really happened instead of a fifth wave here is that this third wave really had stretched and we had 3, 4, that's why I've got the label here, 4, and that what we're doing is that we're often running in a 1, 2, 3, and then working our way and then complete the fifth wave. So that is the alternate possibility that I've got the labels down here and we've started it. I haven't put the third minute wave in here because it just isn't showing up yet. So the way I look at this and the way I told my members is, okay, here's the preferred path, and we'll watch and see how the price action occurs Monday, Tuesday, Wednesday, and is it playing according to plan, to the scenario? And if it's not, then what is it doing, and is it fitting this alternative plan? At least we have a couple paths going forward to let us know which track is either it's on track for this scenario or it's possibly going to be tracking to the alternate scenario. Okay, that is the Elliott Wave picture on the Dow Industrials. Now let's just do a quick comparison between the Dow and the transports, the Dow Industrials and the transports here, because I just want to show you how they're looking. Now this is a weekly view. Okay, so this is showing you back over here. Let me give the crosshairs again so you can see, because it puts the cursor in the same spot in the other window. So here's the January 2018, and then here's all the volatility we've had ever since then. Notice how the move that we had into the highs of January, February of last year on the Dow Industrials were not confirmed by the Dow Transports. Then we had this big downdraft. Well, then the transports fought their way back, got above that high and got above the all-time high of September 2018 and got a little bit more in sync with the Dow. So at this point, I'd have to say when we look at the charts, it looks like they're fairly in sync in terms of I'm not seeing any major divergence between the Dow Transports and the Dow Industrials. Now, I must say that the line of attack, okay, or acceleration is getting pretty vertical on both of these. So you really got to sit back and wonder how much longer can this continue. Now you can have stints of it like we had back at the end of second half of 2017, et cetera, into 2018, but we'll see. And of course, you really have to be aware of the fact that when you're looking, with this market and where we're at with this market in terms of being inside the bubble, which I talk about in that blog post, look at what can happen with these downdrafts. Okay, in the middle of the week last week, Thursday, actually, I guess it was Thursday. The market, here's the Dow, the market literally gave back over 400 points in a little over an hour. This is a 30-minute chart. So what took about 11 hours of trading or so, 10 to 11 hours of trading to build up, it took it back in an hour. So yeah, these downdrafts can be harsh, they can be painful, and so we just got to keep our finger on the pulse for this market on a day by day, weekly basis. And this coming week, we have a third of the S&P 500 reporting their earnings. We have a Federal Reserve meeting and more economic data coming out. So we're going to have plenty of things affecting this market this coming week. All right, let's take a look at oil. Well, actually, no, I want to hit that indicator real quick, and then we'll go to oil. Okay, here's the percent of stocks above their 50-day moving average in the S&P 500. It is at 87.5%. For a few days, it was above 90%. Pretty extreme reading. And then I noticed this downdraft that occurred in a 2-day period and brought it back down to about 80 or so. I looked back and said, okay, when has something like that happened before? And it happened back over here in June when we had that peak in June 8th of last year, and then the downdraft that occurred. We were sitting above 90 for longer than a few days, and the actual high was 97.82. And then we got this downdraft, and then a lot more selling started to kick in. So that definitely, started waving a little flag to me. This trend line's been broken. It's also interesting to compare this to what's happening on the New York Stock Exchange. And the New York Stock Exchange is much lower down here in the 70, and it really hasn't bounced back up into that area. So it's still a pretty high percentage. It's not like it's below 50, but it's not in sync with the S&P 500 by any means. All right, let's take a look at oil. Okay, I like to use USL, which is the United States 12-month oil. And the difference in here, United States 12-month oil, what they do is they use futures contracts in their ETF that are equally spaced for every month for the next 12 months. So you don't get the huge impact of contango affecting the pricing in here on the ETF. And it tracks oil fairly well, but the only thing is right now it is not a highly, not a super liquid in terms of the amount of shares trading. When I look at the 50-day moving average of volume, it's like 94,000. But I do like the picture and I like the way it tracks oil, and that's why I use it. It tracks West Texas Intermediate, which closed at 62.02 on the near-term futures contract. So right now, when I look at this and I look at what oil is doing, I think that we are tracking up in a first impulsive wave. I think that we've completed wave 4 and we're up in here we've started wave 5. But here's my caveat on that here's where I think we're going. I think that we've started wave 5, but this needs to continue pushing. And if this were to come down and close below 21 in here, then I'd really start getting concerned that said, is this impulsive move really holding, or is something else happening? Is it breaking down? There is an alternate count on the yearly view that says this could just be a big ABC of an X wave of a bigger corrective pattern that is still unfolding. Okay, but right now I'm moving forward with the path that oil bottomed back here in April 2020, and that we've got a first impulsive wave up, and this is what I'm tracking. All right, let's take a look at gold. Okay, I continue to hold the bearish scenario on both gold and silver, and I'm going to do that until they prove me wrong. But I was trying to move into the bullish scenario, and then it would fail. So right now, it seems to be accommodating the scenario. I am looking for another leg down here on GLD. For the week, it was up 5 cents, and SLV was up 5 cents also. So it's just not moving very much at all. And when I look at the daily chart, I think there's a pretty decent chance that what we've just done is finish off a flat in here, and that we had a little C wave for this flat. Now, if that's to play out, this needs to continue coming back down and selling off in the next move, the fifth wave to the downside. Let's take a look at SLV. And when we pull up silver, it's a similar kind of scenario, although not as dramatic. You can see it almost looks like it's just been chopping sideways since the high back over here in August of last year. But again, didn't move very much for this last week. I'm looking for the end of this second wave. I think this first wave down was like a leading diagonal pattern. And boy, that got a little distorted. Wonder why that is. Maybe if I take it off of that, because I don't need it on semi-log for this short-term view. So this is the scenario, and if this is really, if wave 2 has ended right in here, then what I need to see is a break of this trend line in here that with this corrective pattern has completed, and we should start moving our way down in a third wave, which should become a little bit stronger. All right, so that's my current take on gold, silver, and oil. We'll see how this next week plays out. Everyone have a great rest of the weekend. If you felt like the video was helpful, give it the thumbs up. If you're not a subscriber, hit that little subscriber button. And again, if you'd like more of this kind of information on a daily basis, head over to joehenches.net. Check out the website, membership, and that blog post.